Hi everyone, it's Katya and welcome to my channel. Today we are talking about mortgages for self-employed, so let's get started. First of all, in this video, I would love to clear a few different misconceptions. First, if you are self-employed, it doesn't mean that you are high risk and you would not be able to get a mortgage. Second, if you are self-employed, it doesn't mean you would not be able to qualify for a conventional loan. And third, it's not only for self-employed, but for all of the applicants, you do not need to have a 20% down payment in order for you to qualify for a conventional or any kind of the loan. Let's start with the first one. When I first started working as a loan officer, my broker, first of all, told me the most important thing that I have to remember is doesn't matter if your client is a W-2 or 1099 employee, they are treated absolutely equally. Yes, you would have to sometimes require additional paperwork, additional supportive paperwork from your 1099 client, but it doesn't mean that the person is treated differently if they are not W-2 employee. Second, if you are self-employed, just like W-2, you are able to qualify for a conventional loan. You will have to meet a few requirements just like W-2 employees, but you are able to get a conventional loan. And third, you do not necessarily have to have a 20% down payment for you to get a conventional or FHA loan. FHA loans minimum down payment requirement is 3.5%. Conventional starts anywhere between 3 and 5%. USDA and VA loans are with 0% down. So every single loan is different and every single situation is different. Your lender will be able to assist you and guide you through the down payment. It all depends on your financial situation. It all depends on your credit score. It really depends on a lot of factors, but you are not necessarily have to have 20% down payment if you are in a good standing. Now let's talk about what you would need in order to get pre-approved. First of all, if you are in business for more than 5 years in the same field, you will have to provide your lender with 1 year of your most recent tax returns. If you are in a business for less than 5 years, you will have to provide your lender with 2 years of your tax returns. And if, let's say, you're in a business as a self-employed for more than 5 years, but for first 3 years you've been in trucking business, and for the next 3 years you are in construction business, those are two completely different fields. You would still have to provide your lender with 2 years of tax returns. Then you will have to also add 2 most recent bank statements from your business account. Additionally, you will have to provide your lender with 2 most recent pay stubs if you are receiving any. Now, when it gets to your ID, if you are US citizen, you would only have to provide your lender with your ID or your driver's license. If you are US resident, you will have to add a back and front copy of your green card, and your green card will have to expire no less than 6 months from the moment of applying for a mortgage. Now, if you are applying for the mortgage with your spouse and your spouse will be a co-borrower on the mortgage, you will have to provide exactly the same documentation for your spouse if your spouse is a 1099 employee or W-2 employee. Now, if you would like to have your spouse only on the title, your spouse will only have to provide your lender with a driver's license or an ID, or with a green card front and back and ID, and if your spouse is a non-US citizen but US resident. Additionally, majority of the times lenders would require your balance sheet and your profit and loss statement year to date. Sometimes they would additionally require a previous year's balance sheet and previous year's profit and loss statement. in addition to that, you will also have to provide your lender with your business license and business formation paperwork if that is requested. Because in majority of the states, like for example here in Georgia, we are able to access the business information through the governor's website, and that is absolutely free of charge. Now, some of the states do charge for that information. So in order for you to avoid additional fees, you will have to provide your lender with that documentation on your own, that with the documentation that you have on file. And finally, you will of course have to fill out your lender's application, providing them with your date of birth, your full name, your social security, your address, your housing history, your education history, your family history, and all of those details so the lender can start working and provide you with a loan estimate. Now let's talk about mortgage options for self-employed. First option is a conventional loan. Conventional loan, you would only have to put 3% down payment. It's a minimum down payment requirement. Your FICO score would have to be at least 620. And your debt to income ratio not to exceed 47%. With these terms, you can buy within a conforming loan limits. Second option is an FHA loan. With an FHA loan and a standard 3.5% down payment, your FICO score will have to be at least 580. Your debt to income ratio not to exceed 50%. You would have to occupy this residence as your primary residence, and you can the same buy within a conforming loan limits. Now, if your credit score is lower than 580, in that case, you would have to find a qualified lender, and you are able to get a loan with your FICO score as low as 500, but you would have to pay a higher down payment, anywhere from 10 to 25%. For a VA loan, your FICO score, it has to be at least from 580 to 620. It all depends on the lender. The benefit of a VA loan is 0% down payment. So you get 100% financing, but you would have to have a supporting documentation from military. Majority of the time, you will have to provide your lender with a DD-14 form. That form is basically a certificate verification that you have been honorably discharged from the military services, and that is what giving you a benefit of 100% financing with the VA. And finally, you can also get an USDA loan. For USDA loan, your FICO score will have to be at least 640. You can the same, just like VA, qualify with the 0% down payment, which means 100% financing. But the USDA, they do have income limits. Your income cannot exceed an income limit in the county where you are applying for the loan. Just like in FHA, you would have to occupy this property as your primary residence, and you would have to get a 30 years fixed rate mortgage. Just as a side note, you can also qualify for a jumbo loan being a self-employed, but your FICO score will have to be at least 720, and you will have to have at least 10% down payment. With the jumbo loan, you are able to exclude mortgage insurance, so that is a plus. Just as a side tip, when counting and calculating your pre-approval amount and calculating your business income, as a loan originators, we do count in your business depreciation, amortization, or miles driven. It's all calculated differently. So even if your business income is not high, you can still qualify if you have a sufficient amount of depreciation, amortization, or miles driven. As a conclusion, if you are self-employed, you can get qualified for any mortgage depending on your financial situation, just like any W-2 employee. Make sure that you find a qualified lender and start your home buying process today. Thank you so much for taking time to watch this video. If you have any questions, please feel free to reach out to me or comment below. If this information was useful for you, please click thumbs up and subscribe button so I would know that this information is helpful, and next time my video comes up, you will be notified. Thanks again for your time, and you folks have a great one.